Hey, what's up there, VV Nation? Steve Chappell here, Director of Trading Systems Development here at VectorVest. Delighted to be with you guys and gals for the first time in a while. Geez, I don't know how long it's been, Joey, but it's been quite some time, so I'm delighted to be back. I always enjoy, whenever possible, getting the opportunity to talk to all of you. And that's what's near and dear to my heart, is being an educator, helping people figure out the markets. And we're going to be talking in particular, at least to start the show today, we'll be talking about the gold market in particular. Lots of interesting headlines beginning to circulate around, and we'll make some heads or tails of that, look at the current gold market, look at some great opportunities in the stock market, in particular with the miners. There are some great ones out there, and they're getting a bit of a discount price again on a lot of them. So let's jump around here and take a look. Joey, if you don't mind, I'm going to move over into the program. And so this is the face of VectorVest, where we are right now, and it's good to see that the markets in general are beginning to try to recuperate here a little bit. One thing I would say is the market as a whole has kind of slowed down significantly and really hasn't gone anywhere for about a month's time in reality. I mean, certain segments of the market, tech stocks have been performing better than small caps and things of that nature, but market has significantly slowed down. There's been a lot of attention in relation to that, and among other things, on gold and silver. The whole de-dollarization trade, I think, has become the key term out there that people are throwing around a lot. And just with how monetary policy and everything has begun to shift, it's certainly thrown a pretty big spotlight on gold and silver. In fact, on silver so much that they're flying planes out over to London to make sure that there's enough physical for the demand. And I heard an interesting stat, something like 6 times the amount of paper being traded than physical asset in terms of the silver market. But shifting back towards gold, which certainly seems to be a little bit more stable and certainly still provides a tremendous amount of potential upside. Let's get to a few of the stories, actually. I'm going to toggle over to those. We'll kick things off with just the chart and kind of set the stage. I think what a lot of people are thinking these days is, my goodness, gold has soared. I think to the tune of north of 60% or something like that so far this year. And it really accelerated as we got through August and went on this dramatic run up. And of course, we pushed all the way up to nearly 4,400, maybe just north of 4,400 before we've pulled all the way back towards 400 and have bounced a little bit from there. And so the natural question becomes, where are we going? Is this just the first of many legs down? Was this some profit taking, and are we likely to just turn back higher from here? Well, we can lean on a lot of information that's out there, and certainly there's a lot of great people to follow, but just with a couple of the things that I've lined up for us here today, we can start things off with this little article from Trading News. It says gold price forecast climbs to 41.40 as dollar eases. CPI is in focus tomorrow. We're finally going to get a look at some inflation data. Last I looked, in anticipation of this, the CPI is expected to actually tick higher by a couple tenths, over on a year-over-year basis, rather. And so that's interesting because traditionally, that's not going to really favor gold all that well, but we are kind of in the midst of all these other things that are occurring right now. So it's going to be interesting to see how the number comes in. I think the expectation is 3.1, if memory serves correctly. In fact, I could probably just look that up for you guys here really quick. Doesn't take all that long. I can go to investing.com. I can go over here to Tools and Economic Calendar. I do this just about every single morning, actually. Tomorrow, and then unfortunately I do need to set this up since it's not my computer, or just continue to scroll all the way down here until we get to, that's Cleveland CPI, there's services, here we go, perfect. Yeah, it's expected to tick up from what was 2.9 prior, last time we got a look at CPI, to 3.1 this time around. Just wanted to make sure I had those numbers straight. So, it's interesting. I would expect some interesting things could happen if inflation begins to rear its head here again. So, kind of the perfect world scenario would be inflation to come in way lower than expected. We'll see if that turns out to be the case, because that would much more greatly continue to influence the Fed, along with the crumbling jobs market, to have another layer of information telling him he can go ahead and, in fact, ease rates. Last I looked, and I do look at the betting markets these days in relation to upcoming Fed announcements, and it's been pretty predictive. It's been pretty much right on the spot as we've gone through all of these announcements. And I think the latest number is something like 97% probability of a quarter point rate cut as we get into the Fed meeting, I believe, next week, right? So, that certainly should provide a little bit more potential for the gold market to rally from where we are as well, as that should lead to a little bit of a decline in the dollar, which has been interesting. The dollar has been rising a little bit here over the last 3 months, I guess. Kind of wildly, but nonetheless, uniformly higher. So anyway, all that being said, let's assume for a moment that a good scenario comes in. We have maybe at expectation with inflation or lower, and we have a lot of room for the Fed with all the information they have in tow to go ahead and start lowering rates, and we could see another jump in the gold market. What would be some good opportunities for us to think about? Obviously, you could go out, you could buy physical gold if that's something that interests you. It doesn't interest me whatsoever. I'm a market guy. If we ever need to snap up some gold bars from underneath our mattress, I'm not sure that they're really going to do us a whole lot of good at that point. That's kind of where I stand on that. And it's okay to have differing opinion there. But there's a lot of good opportunity in the stock market itself, okay? And so what we're going to do is get back into VectorVest here quick, and I'm going to show you around a little bit. One of the beautiful things about VectorVest, I've done a lot of shows. I've been out to a lot of what they call traders expos, for example, or you might have heard of the money shows, big financial gatherings. Way back in the day, it used to be, when we first started going, tens of thousands of people would be at some of these shows. But anyway, one of the strengths of the VectorVest platform, as it relates to really any other platform out there, is that if you've got an idea, like if you believe that, hey, look, JP Morgan Chase, which by the way was another article that I had set aside for us, they're indicating they believe that gold prices are heading to 4,900 as we get into next year. And you're hearing big influential names. Traditionally, a lot of the big money managers would be talking about, a reasonable amount of gold to own in your portfolio would be somewhere in the neighborhood of 5%. Now you're hearing a lot of names, and a lot of significant names talking 20, 25% even in terms of how much gold to consider for your portfolio. And I'm sure that there's some jaybirds that are well north and well south of any of those numbers. But that seems to be where most of the smart consensus tends to be these days. So with that kind of a backdrop, if I want to get in here, realize that the market has pulled back a little bit, and look for what are some of my very best potential money makers in terms of stocks, and in this case, stock miners in particular. And then maybe also we can look at ETFs if you want to do that. But let's look at the miners in particular first, because they're the things that people would have the most questions about. Lots of folks don't know what to look at in terms of important economics for the individuals. There's certain risks that you run with the stock miners. You run risks like, that machinery is very expensive. At the end of the day, these folks are a corporation. They're affected by rising or lowering interest rates, rising or lowering inflation, and all those economic forces, which, as we've been indicating here as of late, even today, to some degree, a lot of the backdrop for the markets and corporations is thought to be heading into more of an accommodative state right now, right? So that works to the advantage of even the miners on the gold and silver side of things. So what I'm going to do is get us into a list of stocks that I've set aside, but also show you different ways that we can get to some information in VectorVest. So for example, in VectorVest, not only do we track stocks, but we also track industries. And so one of the things I can do is I can come up to this Viewers tab. I can then come over here just into the viewer itself, into our directory, and we have a sector viewer for example. And so a sector is a conglomerate of individual industries. So as we kind of peel the onion down through the stock market, you've got the market itself, right? Then you've got sectors. A sector would be like, well, in this case, mining. And then you have industries that reside within those sectors. And that would be gold and silver or uranium or other, whatever the case might be. So in terms of sector itself, pretty simple. We can just alphabetize the list. We can go looking for mining. All right, and when I get in here, oops, often it's best to just go ahead and double click it, unless you like going through the alphabet backwards. I think I had to do that on 1 or 2 occasions, Joe. That's a story for another day. So, let's see here. We'll go to mining. I was able to do it, by the way. All right, let's see. We go to mining, and we look across here, and we can get a general feel for the health or direction, most importantly, of mining just by looking at what we have is a relative timing column here. Relative timing deals with short-term price trend and direction. So it's pretty sophisticated. You can think of it a lot like any other technical indicator. It's our own, it's proprietary, and it has a lot of heavy math in it, as many of them do. But this indicator is cast on a 0 to 2 scale. Above 1 means you're rising, okay, with that trend and direction, and the higher that number goes, the faster it's on the move. And for an entire industry of stocks, once you start getting north of 1.1, actually you're really moving pretty quick overall, okay? The only thing I see on the list right now that's moving any faster is electronic, for example. And then you would have like electronic semiconductors as an example of that, okay? As an example of an industry within that group, within that sector. All right, so here's mining. One of the things I could do from here is right-click it and view the industries within, just so I can just show you this breakdown, give you some exposure to the platform. Here you go. Yep, those are the 3 I mentioned. I didn't know if there might be another that I couldn't think of, but the nice thing about VectorVest, everything is force ranked every time you go to anywhere in the platform itself. So one of the things I know immediately when I open up and look at the individual industry groups is I know that gold and silver is actually performing the best of any of the 3 choices here. And again, the reason is it's sorted and ranked by relative timing, or RT. Okay, so gold and silver is not just moving at 1.1. I think the mining sector was. It's moving at 1.18. So it's by and large the big driver here. Uranium stocks have certainly been in favor. We looked at a couple of those this morning in my trading room. I think we were looking at a UUUU and a Cameco or Cameco CCJ. We were looking at a couple of them. I didn't really see an entry. But in any case, looking at gold and silver, that's the subject at hand. What I can do from here is double click or even right click again and view the stocks that are in that group. And so if you're following along, our best opportunities are going to be found towards the top of the list, just straight away. Now, that doesn't mean that you should not check the data, and look through the pieces, parts, and make sure that you're absolutely finding what you're after. But in general, the top 10 should be better than the next 10, should be better than the next 10, almost for sure at that point, okay, if that makes sense to you. When you start looking one particular stock compared to another, it's sometimes very difficult actually to make a separation. The numbers can be just that close. All right, now when we look here, first thing that we're confronted with in VectorVest, of course, is the company name, the symbol, the exchange it's traded on. Some of these are actually over the counter, which is interesting, or NASDAQ, like SSRM. But more traditionally, most of these are New York Exchange, okay? Anytime you see a P, that's a pink sheet. So we kind of avoid those for the most part, although they are electronic these days. They don't no longer exchange the paper, which is where they get their name. It's a much more thinner market just in general, if we were to scroll out and look at the volumes. So I just wanted to get you acquainted with that a little bit. Anything that has an X means that options are available. So if any of you out there like to do credit spreads, in this case bullish credit spreads, whether that be, I said credit. So, or buying long calls, whatever the case might be for you. With the kind of upside that these stocks I think you're going to see in a moment have, both of those are pretty good options to think about. And of course, there's other directional plays if anybody's into skip strike butterflies and things like that, or what have you. But just kind of thinking in terms of grassroots and basics, these would be good general long call candidates as well as just owning the stock outright. Either way. So when we continue across, just to make sure everybody's acclimated here, you're going to have a price. That's the current price, tick by tick in the market. Might be just a small delay there, very, very slight. We then have the dollar change, how much they've moved from the prior day. We have the percent price change, or that dollar movement, dollar and cent movement, expressed as a percentage. Then you have the value, what VectorVest feels these stocks are truly worth. And that's one of the things that I want you to pay attention to right now, because it should hopefully be jumping off the page at you, is look at the price of the assets just in general and look at the value scores next to them. 41 to 66, 23 to 36, 12 to 19, 23 to 40, 89 to 137. They're all well underneath value. And the simple reason, as you hopefully have already guessed, is that the underlying asset for the stuff they're digging out of the ground has done nothing but continue to climb. And as companies are putting together their projections, a lot of times they're probably not even figuring gold would even be at the levels that it's at right now, right? So we've got an interesting situation coming up here where a lot of these miners are going to start reporting their earnings. I think one starts, it might even be today. We'll look at that here in a second. I think it might be after the bell with Newmont. And Newmont is, a very desirable miner. It's kind of if you were just to ask a general professional off the street of a gold stock that somebody might be interested in, that's probably a name that comes out in the first 5 or so names that you're given universally. And for good reason. There are better choices, as VectorVest will quickly show you. And that's, again, the advantage of VectorVest, is you can take some of that intel, you can put those stocks into a list or go to a list where it's contained, and you can see of its peers, is there anything better? Okay? So price and value is certainly one consideration. Now, value just gives you a base assessment of what the company is really worth. And what we do here at VectorVest, we look at what's called a hurdle rate, essentially. We have an entire chapter in a little green book that Dr. DeLito, our founder, wrote called Stock Strategies and Common Sense. There's more to it than this, okay? But basically, we look at the company's earnings, we look at their return on total capital and some of those kinds of factors, how well they utilize that money, for example. And we like to see that well outpace the sum of inflation and interest with a yield premium thrown in. So, for example, we also add into that equation on the other side of the hurdle that the average earnings yield for all the stocks in the S&P 500. So not only do these stocks to be undervalued like this need to be making money, they need to be making lots of it. And so much so that they're well above, say, the average stock on the S&P in terms of their earnings yield. So that's a terrific start if you're keeping up. Okay, now when we get to this next indicator, it is not in relation to the value score whatsoever. It's an independent assessment. This one here is called relative value. Okay, now relative value looks at price appreciation potential over a 1 to 3 year time horizon. And what it's telling you right now, when they're north of 1, it's telling you that not only should this stock outperform a similar investment in a AAA bond, it should in fact well outperform that's relatively safe investment in is it AA plus these days, Joe, or AAA? It's hard to keep up. But AAA corporate bond right now. There was that little blip where it went AA plus. So I don't know if you guys remember that or not. But anyway, so these are all of them. As you look down this whole list and you look at that RV column, these are all much better choices over the next 1 to 3 years than just simply putting your money into bonds. Okay, and by a huge amount. So, just to go all the way down the rabbit hole briefly, Newmont Mining should outperform a similar investment in AAA bond by 68% over the next 1 to 3 years. Okay, now that doesn't mean it goes up 68% per se, although it might. It's to say that it should outperform that current AAA bond rate by 68%. When we look at relative safety, we look at risk. And one of the nice attributes you have here almost across the board in this space as well, and this is not the situation across the broad market right now, is you've got tremendous upside potential with those RV scores, and you've actually at this stage got a really strong amount of safety because they're getting into consistency with this earnings performance at this stage. They're continually, quarter after quarter after quarter, year after year after year at this stage, really hitting, meeting, beating, and exceeding all of these earnings estimates that the analysts are producing on these companies. And so the better job they do at that, the higher this safety score goes. So here, like with Newmont, if we just stick to that story, it's a great choice because tremendous upside potential compared to a bond investment, and it's very safe. Anything over 1.4 is like excellent, top shelf, okay? So it's getting close to that territory. So it's got good fundamentals. Next we need to know, is it technically a good time to think about it? We look at Newmont here coming in at 154. What that's telling you is not only is price trend in direction up, I mean, it's really moving. And we look at the price today, it's up a pretty decent amount even just today. Now it's come down, I realize all those things. Remember, it's looking at more than just the day-to-day movement. I can go all the way into the math as much as I know, but I don't think that's necessary. Just think in terms of it's more than just day-to-day movement. It's magnitude of movement over time, direction, all of that, price dynamics, okay? Then we take a master score, and that's how we force rank all of these stocks. That's why immediately there's potentially better options just above it. And there is, for sure, with at least one of them. We'll talk about it here pretty quickly. But that's how they're ranked, by the best combinations of all three of those factors: upside potential, risk, and price direction and magnitude, okay? So Newmont would be a good choice, but what about, say, a Kinross? So when we look at, say, Kinross in relation to Newmont, Kinross is trading $23.96, has a value of $40, nearly double the current price. So that's a much higher bar to try to hit when you realize price and value tend to meet over a 1 to 3 year period. That's a much higher bar that stock price has to achieve in relation to, say, a Newmont, okay? And at the same time, you're likely to see outperformance here, and maybe that's part of the reason why. They're making a lot of money, they're growing it very quickly, okay? And that's, by and large, producing this really high potential for this stock. One of the highest growth rates in the whole space, for example. Not the highest, but up there. So when we start looking at the whole picture and we look at, hey, it's trading almost less than 2 times value, right? When it's trading half its value, say, the upside potential is stronger. It's actually done a better job with its earnings financial performance over the last 12 years and on a forward guide for the next 2, okay? And it's moving up the page just about as quick. All these factors considered, let's look at a graph of Kinross, say. All right, so when we come over here, obviously we'll call it a profit-taking event here so far. On the back of this profit-taking event, Kinross was certainly not spared, and nobody was. I mean, this was an industry-wide thing. Most of them started to approach their 50-day averages before they started to bounce. So that's one lesson and one takeaway is you're getting an opportunity here where this is a level. If you look back historically at Kinross, there's a 50 bounce, 50 bounce. After we got going, particularly late in the year, right? 50 bounce, 50 bounce, 50 bounce, 50 bounce, 50 bounce. Where are we now? 50 bounce. Are we going to new highs? A little too early to say. But if we revisit some of those headlines, Joey, I'm going to switch back to news. I don't know if that affects you in any way. If this is true, it's actually moved up I think the prior one that I heard, maybe it was last week or the week before, was 4,900. Now I'm seeing 5,055 per ounce by that's late 2026. Maybe they're just moving it down the road a little bit with their forecasts. But in any case, yeah, this would be a really ideal time to be looking at an entry on some of these miners. So I just wanted to make sure people were aware of this, whether you're in VectorVest, haven't been with VectorVest for very long, whether you've never seen VectorVest before, boy, you're getting a great little tip here today, if that's the case. Hey, what's going on, Furby? I'm looking at some of the comments now as I'm finally getting to a place where we can pause for a little bit. I'm seeing some very familiar names out there. That's great to see. Very good. All right. So this is something to think about, you know, and I put together a list of ones that I thought are looking pretty interesting. This little Hecla, honestly, has been so resilient here. And by and large, look at this earnings here, guys. Look at this explosion here, okay? So if you're looking for one that didn't pull back towards its 50, could only manage to pull back towards its 20, and these are the kind of stocks I typically really like to buy. Now, I'm more of a trader, so this is kicking things up a little bit of a notch, just for full clarity. I enjoy trading quite a bit. And this is what Dr. Linda Bradford-Radsky would call a holy grail potential entry on this stock. It's a stock that's moved up the page fast enough to push 80x. For people that are familiar with technical analysis, if you're not, we can accommodate in VectorVest. So 80x is a non-directional indicator. What it does is it just measures trend, okay? When various traders have, depending on their tactics, developed different levels for what they feel is adequate trend, or an adequate 80x score. Now, having said that, there are some universal truths. So when you are less than 20, as it was most of the time back here from March through August, early August, that is non-trending, no trend, absence of trend, okay? As it starts to climb through 30, you're starting to pick up strong trend. And that really didn't occur until we got over here into late August so far this year. So if you're keeping score and paying attention, that's a little bit eye-opening, because now this is going to start to hit some of the most successful traders in Wall Street's radar. Well, at least one. Her name, Dr. Linda Bradford-Radsky, okay? And so what we're looking for are situations at some point, and for this one, these stocks ran so good that waiting on this particular setup would have taken all the way till now on this particular stock. But it is a situation where on these swing highs, when price pulls back and kisses the moving average, you look to enter the trade the following day on a break of the kiss candle's high price, okay? So I'm just going to zoom in here a little bit so we can see things a little bit more clearly. So even in the case of this high, 80x, it doesn't matter whether it's coming to a lower value or not. That is telling you that trend is dissipating somewhat. Although if we said strong trend is 30, 51 is extremely strong trend still, okay? It doesn't matter what happens to this next. All that matters is it's above 30 when we hit this watermark. When it pulls back and kisses, what we're doing is we're looking for a situation where the next day the stock price goes enough above the prior day's high that you feel comfortable with entering a trade. Now, generally speaking, most professional traders don't trade equities less than 30 bucks, okay? So they have rules like 12.5 cents. That goes all the way back to when stocks were traded in eighths, but still applies today. And why? Because it still continues to work. So it doesn't matter the why. They still use the same rules from habits they developed long ago because they continue to work. even though we don't trade in eighths anymore, okay? You're not going to use 12.5 cents on a $13 equity. I mean, that's a lot of slippage for a trader. But, 6 cents, something to that tune, maybe cut it in half just to try to minimize some of that damage is reasonable, right? By the same token, if you're looking at a $1,600 equity, you're probably not using 12 cents there either because that's too slim of a margin. So you might use a couple of bucks, for example. Okay, now having said all of that, if we were looking for, say, 6 cents off this was a kiss candle here. We could look at the high price here, which was $13.16. We could look at the high price today on the next day, which was $13.20. That didn't quite cut it, okay? And so whether you used 5 cents or 6 cents, it wouldn't have got there. However, when we look today, it has. And so the way that this is traded, guys, and this is the really cool part if you're paying attention, and by some degree, I'm not really sure why I'm giving all this away for free because we're getting into the nitty gritty here. You caught me I'm coming in hot today, so you caught me on a good day. I'm giving away a lot of good stuff. You could trigger in today, okay? The way you manage this trade is very simple. A few cents below the low is your stop loss. Target, bring it down inside the prior swing high. Risk to reward, more than 2 to 1, love it. When we get here, take some size down, let the balance run if it will. That's how it's traded. There's nothing more to it than that. It's that simple. Use the 20 average as a guide, or any kind of, let's say some kind of wild thing happens with CPI tomorrow and it comes in way hotter than expected and everything kind of backs off. If you're in a trade and you see something really bearish develop, you can always exit at any time. But this is just the general lay of the land as you enter in. Stop should be down here. Target should be up here. If we get there, least little tiny bit of weakness, take some size down, let the balance run. So that's how that goes. Having said that, these guys, I think I said this in Vegas when we were at our 2-day investment seminar out there just, about a month ago, Joe? These they're starting to look like tech stocks. I mean, this earnings is starting to me to look like NVIDIA back in 2016, 2017, 2018 when it started to break loose. So I just think that there's going to be an awful lot of potential in this space. I think that there's going to be more dramatic swings now that maybe sort of quote unquote the easy money is behind us, at least for now. And, so this is going to be a good way to kind of look at these trading opportunities in this space on a forward basis. And really, you could use the same kind of tactic on the 50. It won't then be a quote-unquote holy grail trade. But in the case of, say, a Newmont, and one that's hitting the 50, let's see if we've got one that actually did. I think KGC did. Okay, you do the same thing. Put your stop underneath the low. Look for enough of a move today, which I think it's already done, to enter in, right? Here's your target. I usually bring that down like 50 cents to $1 inside of the highs for sure. And I really like to look at more of the closes and the opens up there at those swing highs than the actual wicks. In the case that you got like this huge upper wick on some of these things, don't try to place your targets at the top of those wicks. That's crazy. You want to come down a little bit. All right. Anyway, here I am getting into the trading weeds. Let's get out of the trading weeds. This right here, ladies and gentlemen, this thing right here called EPS, this is the engine that drives stock prices higher and higher and higher. You want to talk about ignore all of the irrelevant information and focus on what matters? This is what matters. Ultimately, this is going to dictate the price action. As long as this continues to move in the fashion that it's moving right now, The prices on these equities are going higher, and they're going a lot higher than they are right now. And that is a fact. Money goes where money grows. We've been spreading this gospel for, gee whiz, Joey, I'm getting up there now, man. It's 25 years now almost. I hit my 24th year anniversary, I think, this week. I've seen it happen over and over and over and over and over again. Eliminate noise. Focus on what matters. What matters is what's called the bottom line. So when you see all these earnings reports that are coming out over these next few weeks, what matters is the bottom line and where the bottom line is going. What matters is the EPS and where the EPS is expected to be going. That's what matters. Everything else is a story, like Tesla. He tried to sell you another story. Earnings are a complete disaster in Tesla right now, okay? And maybe at some point in the future, all of these robots and all of these robo-taxis and all of these other things are going to amount to something. But until they do, I don't want to hear about it. Okay? This is what matters. In the meantime, you're tying up money there, you're just missing opportunity everywhere else. This is undeniable that this stock price is going to go up because the earnings are going up. Period. Exclamation point. Okay? All right. Sorry, I got on my preacher's box there a little bit. We look at the chat. Steve, I remember when you were just started with VectorVest. Hey, what's up, John? We were both kids and had no gray hair. Well, I'm so glad to see you still here, John. It's awesome, man. That's awesome. Let's see if I missed anything else. Donnell, thanks a million. Probably talking to somebody else. Let's see. Michael Anthony. SDJT on Wednesday was climbing 1616 headed to 1625 until news came out about China. Yeah. So I know that this was mostly focused on gold here today, and I do want to get to your stocks. I think that's going to be an important segment. Just really briefly on that note, since you bring it up, there's a couple of other interesting market segments that are transpiring right now that are not traditional stocks or NVIDIAs and things of the world. Oil is starting to bounce on Russia relations, right? And boy, that seems to be really heating up based on some of the headlines I was looking at today. Oil market could be somewhat interesting. I was looking at UCO in the Jockey Club with them just yesterday in our trading room, and it's starting to bounce pretty good. You know, I kind of feel like maybe this is really just short-term stuff here, to truth be told. I'm not sure that, you know, crude's going to go bananas over anything that's happened here so far. But it needed some kind of catalyst to get back up into that $60, $70 range, didn't it? Well, you got one. So sanctions on Russian oil. The other thing, you were talking about rare earths. So Besant, I believe, is on a plane right now, or got on one yesterday, and is headed out to talk to the equivalent from the Chinese administration, from the China administration. And that's over all this rub-up, right? So that's going to be all over the tariffs. And I would think, obviously, soybeans are probably part of the equation, but rare earths is the desire, right? Rare earth is the real topic. So that's going to be interesting. Maybe we should just look at a couple of those stocks just really quick. And this would be a great example, guys. So what if that tension goes through the roof there, right? What are some of these rare earth companies? So here's a couple that you might know the name. See, this is what happens. We should just do no plan. Come in, you guys start talking, and I start going places. You know, that's what we should do. So I'm gonna go to Stock Viewer because I could do that. Okay, let's go to Stock Viewer here. Let's go find a couple of these guys. I'm going to give you two names because both of them are probably the most common. So we'll look at USA Rare Earth, and we'll look at it's UAMY, right? Yeah, US Antimony. Okay, there's a huge difference between these two companies. They're both tradable. but I'm going to show you the difference. You might say, oh, wow, I heard about these couple rare earth companies, and if these tensions pick back up and these, they start holding back on the rare earth, and these stocks might start moving again. Yeah, they might. Look at this. Look at the information we talked about earlier. Look at where we are now. They're both optionable. One's on a little bit of a junior exchange. The U.S. antimony is on the American. Okay. Not much value in either place, but one of them has really good relative value. So again, there's a difference. You might say, I thought you wanted to buy undervalued stocks. Well, you do predominantly. Most of the stocks in the stock market right now that have any kind of real worth aren't undervalued anymore. We're on the tail end of like a 15-year bull market for the most part. And what, 30-some trillion dollars of federal spending to get us here. But here's the deal, man. Here's the reason why one is clearly better than the other. One is actually making money and growing it at 50% a year. And oh, by the way, has plenty of fuel in the tank for that earnings growth. So not only is earnings growing at 50% a year right now, the sales growth is booming at 187, which gives, like if we look at a graph here, oops, what'd I do, Joe? View stock graph. Oh, down here, way down here. Sorry, guys, I'm not in my office, so this is new territory to some degree for me. All right, so prices haven't pulled all the way back to that 20 yet, but they did come way down out of what was a 6 standard deviation move here. I could put Bollinger Bands on here to show you that. In fact, I'm quite sure that Glenn had showed you guys Star Search at least at some point. Well, it was only a 3 standard deviation move actually. This was off kind of that initial tariff craze from China, pushed it all the way up here, and we've kind of come right back down into normal deviation. Okay, so that's good. The things have settled down enough to where you can start looking at it again. Now, from here, let me go back to VectorVest Simple. We already talked about it. This is the engine that drives stock prices higher with consistency in the future. Okay? If that's true, this is the only one that had it, and it's growing it quick. So while prices have skyrocketed here, come back down to reality a little bit, which, by the way, is probably a 61.8 pull. Look at that, right at 61.8. This is about the time where you want to really start looking at this thing again. And oh, by the way, it's funny how these things technically tend to line up right around the next catalyst. Now that catalyst, in the case of U.S. antimony, it is trading high. So if there is no further bullish catalyst here, watch out, okay? Because yes, it could go much lower if that turns out to be the case. But if there is further catalyst, if there is further government backing, monetary backing of this company, if there is further trade tension, if there is that kind of stuff, this is the kind of stock that could really move up the page pretty quick again. And you're picking one that at least has future value. USAR, now who knows, maybe USAR gets some government backing in the future. Things begin to change here because they actually start making money. Those things can happen. But right now they're not. So if I had my druthers, if I had my pick, and you can just see now visually, like this was largely just the craze, and things have just really settled off at this point. And knowing what I know now, it all makes sense because there's just no earnings to speak of here. All right, so anyway, let's get to your stocks. That's why a lot of you come here, and I definitely don't want to get away from not doing that. And sorry I haven't been quite as plugged into the chat as I would have preferred to be so far, but we'll get into that chat now, Joe. Let's look at a few stocks of theirs. So if you guys want to just put, CRML, that's another critical minerals one. We'll look at that one first. And if you guys want to start putting some symbols in there, I'll have my main man, Joe. And we're not going to play any favorites. All right, hold on a sec, Joe. Oh, Rigetti. All right.
Rigetti, IREN,
Iris. Yep.
PPIH, FTK.
I can tell most of you are not VectorVest subscribers. Hold on. Hold on a second. FTK Flowtech. All right. Yeah. That was one of my favorites coming into the year with the administration change, was Flowtech, actually, before this year even started. I have a video on that in VectorVest University. Election stocks.
ETHT.
ETHT?
Hood.
Oh yeah, that's Ether. Hood, good pick, that one. If you want to play Bitcoin and all that, stock market wise, Hood's the right play. Keep going.
AMBA.
AMBA?
Yep.
Yep.
IBIT.
IBIT, yep.
One more.
Sure.
Fix.
Yep, give me one more.
And serve.
SERV?
SERV.
All right, let's do it. All right, guys, we'll go through each one of those. I did say CRML first. This one's better, so this is kind of the tweener. This one's between the two that we were looking at earlier, okay? So when we look here, you see how the numbers are kind of getting between in some cases anyway? Not in all. Geez, I'm a little surprised by that. Yeah, I mean, if it were me, if it were my money, I'd go with the VectorVest. I'd go with the VectorVest favorite here, and it's a favorite by a long way. It just really is. You know, somebody might come up to me a few weeks from now and say, well, they got, $10 million from or $100 million from the government. Okay, well, I'm glad we knew that was absolutely going to happen. So those things could happen. You got to assume they're not going to, because you don't know that, right? So with that being the case, UAMY has got a lot of government backing already and just has better numbers by a long ways. All right, let's go over to the list that they just gave us here. And we'll start with Rigetti Computing. Now, Rigetti Computing is a little bit interesting to me. One of the things that sticks out right off the page is it's come back to support. Earnings are at least trying to get going the right way. They're still a little bit of a mess, but these are emerging potential big names in the future. I get it. I understand where you're coming from, okay? Problem is they're still a fledgling. They just still are. I mean, those are the facts. They're not making any money yet, so, so it's a gamble. The way that we classify these kinds of stocks are speculative. Doesn't mean you can't trade them. You got to understand what you're dealing with. In fact, what I've done with my own perspective on things, generally I'm carrying about 20 positions at any given time, okay? Not always, but just in general. Of those 20 positions, 18 of them are rock solid VectorVest. You got to live a little bit. Anybody not like to live a little bit? So if you're going to live a little bit, this is one that you can think about. It's at support. Now, when I say that, it's important you understand that that's just not saying, okay, go. You need to own the other 18 that are good. You need to be able to finance the mistakes. You need the other ones to compensate for inadequacies of picking the big winner. It's a logical pick. I understand where you're coming from. It's just got a long ways to go. The one thing I would say, it's at support. Looks like a reasonable potential entry. If I put the moving averages on here that I like to use, I can't tell people what to do, okay? I can just tell you what the charts say. I'm not going to tell you what to do. I'm going to tell you what you're dealing with. And it might be through the 50. Or no, it's going to be inside the 50. Yeah, so it's still well inside the 50. Didn't quite hold the 20. It's a little bit in no man's land, honestly. I think a big to-do about tomorrow as well. So if you're thinking about Rigetti, you really want that CPI number to come in, low tomorrow. You really do. All right. I should have put these in a watch list first. And there's no way for me to do that now. So what I'm going to do, I can roll with the punches here, Joe. I'm going to give you an idea on why I say this. So the RV and the RS, yeah? RV is 0.02. We were looking at those gold stocks. Let me do it this way. Watch this. We have something in VectorVest called a performance chart. So I get what you're saying. You know, Rigetti is going on these wild swings. That's going to create some opportunity. That's true. You know, so if you're after that, though, you still want a heavy, you know, this little guy down here is still moving. And they're already making money and lots of it. So, you know, those are the kinds of decisions that you have to make. All right, back over to the main list here. I want to try to get to everyone's. That would be very depressing if I was at somebody's YouTube cast and I gave them a stock and they didn't get to me. Irene is trying to bounce at the 20. That looks good to me. So this, honestly, again, for me, I'd be looking at this with pretty good, yeah, it's got, you know, earnings are at a new high on a forward basis. So that's really cool. It's holding the 20 here, and I would be looking at it based on all that. But VectorVest is, you know, this is better. This is a better setup than the other one because it's got the earnings with it, and it's also very explosive. This thing's gone from what, 20 to 56? You know, hit a high over 70. And it's actually got earnings to it. So there are always stocks out there that, you know, are doing what we like at VectorVest like to see them do, that have the same kind of explosiveness. Yeah, that looks good. Okay. Now, the one thing we got to realize is it's trading high. Again, well, you know what would surprise some folks? NVIDIA's not. You know, that's what the difference between VectorVest and everything else is. Look at this earnings here, you know it? And it's so much, people might say, well, you know, I missed it. NVIDIA's at 182. It value's over it. So, you know, these things matter, is my point. So you just got to know in the back of your head that it's trading pretty high. However, short-term basis, there looks like there could be some opportunity there if things go well tomorrow. Flowtech, yes. This seemed like a logical. I'm not sure that the administration has actually done as much as I might have expected. But anyway, this was a name I brought up in November of last year as a potential breakout candidate for this year based on the election results. It really didn't do much until we got to May. But it's on the move. Look at this earnings. Earnings look good. So that's supportive of the price action. Again, that one looks good to me. It's not a great level to buy unless it breaks out. You know, you're at resistance right now, and it was a pretty hot day. Was this earnings today? No. Last earnings report went pretty well. That's also good. The last couple went pretty well. The last 3 in a row. Nice. And earnings is still a little distance, a little ways off, which is also good, you know, if you're thinking about trading. So I like what I see there. ETHT, Ether, Ethereum. Well, just bluntly, Ethereum has some value to it. So I like that in comparison to Bitcoin. It's at support. So the last close, it looks like, came in right at prior support. It's tried to bounce a little bit today. Ethereum kind of goes as Bitcoin goes. Last I looked at Bitcoin, it's still just kind of floundering around 109 or so, which was this morning. So, there's going to be no indication in VectorVest to buy this. It would purely be technical analysis. This gap has already been filled over here. You're at kind of a support level. I don't see a lot of life in the chart. I'm going to put volume on here. I'm trying to work hard for you here. I want everybody to be happy if they can be. There's not much interest. There's not much interest today at support. We'll see what tomorrow brings, you know it? So for now, it's just kind of setting up as a potential support play. The antidote is pretty simple. See if I can find a classic example. Yeah, you're looking for this day here tomorrow with increasing volume, even better. You're looking for an explosive day with a new high volume mark. That's what I'd be looking for. All right, let's see. Hood, the safest, surest, easiest, simplest way to play all this crazy stuff. Hood is also at support and is making a lot of money. So it has a justifiable price point by more than you or me. Markets are going to like this. The broad universe of people who invest their hard-earned money into corporations that have a working model. Robinhood has a working model. How do I know it has a working model? It's not because all the kids love it. That probably helps. I actually really like it myself. Simplest trading platform I've ever seen in my life. I don't know how you could make one any simpler. And I don't love it because I like all my option tools in Thinkorswim, But who cares about that? That's just anecdotal stuff. This is the bottom line. The bottom line is earnings are tremendous here. You're paying a premium. Why? Because this is what they call a ruler stock in the industry. All this company does every day of every week of every year is make more money. That's all they do. If that's the case, share prices go up. It's that simple. Nothing more complicated than that. I love Robinhood. Robinhood's one of my favorite stocks in the stock market. AMBA. Let's see here. Ambarella. Man, Ambarella is a mess. And when I say that, this time it's price. Earnings are finally, this is a significant event. That's important. They're finally, for the first time on a bottom line basis, going to actually be turning a profit on a bottom line basis next year, about a year from now. That's a big event. Investors like that. So that's good. I learned this expression from our founder, Dr. Bart DeLito, 20 years ago plus. What you see is what you're going to get. So when you buy this, the reason that I wouldn't touch it, me personally, based on what he said right there, is you're going to have to live through all of those bumps and wiggles. They're not going away. The only way they're going to go away is if this continues. And so they might in the future at some stage. But it's not to the point yet where you can begin to surmise that. So as long as you're comfortable with what you see, that's good, because that's what you're going to get. You're going to get wild, erratic price behavior that likes to go into large blocks of consolidation, like this rectangle here, the current rectangle here. You're going to have wild gyrations up and down. All of that's going to continue. If you're cool with that, at least earnings are heading the right way. I think, for me, I'd much rather buy something like this versus have to deal with all of that erraticism. And you say, well, Hood's pretty erratic. Well, no, it's two different kinds of erraticism. This one moves up cleanly and consistently before it pulls back cleanly and consistently. I can deal with that. I can invest or trade around that. I cannot and would not even try to to trade that one. All right, let's go to the next one. So this is IBIT. IBIT is range bound here right now. It's finding, this is a heavy support zone. 1, 2, 3, 4, 5, 6 touch line. You like that part, yeah? So this is not VectorVest. We don't produce a relative value or a relative safety on Bitcoin. There is no way that you could. These levels need to hold, guys, or I'm going to give you 2 potentials here. If that doesn't hold, you're probably going there next. Now, I'm not saying that's going to happen. The support has to break first. So I know there was a lot of weird stuff that happened like a week ago. There was a Ponzi scheme that got uncovered that resulted in a lot of outflow. There was lots of forced liquidations on a lot of leverage that I think were because of altcoins induced that in some way, and all that stuff. Billions and billions and billions, tens of billions of dollars. So maybe all that's worked its way through the system. Maybe it's going to hold support here and get going. Oops. I would, if I'm interested in the Bitcoin market, I would want to start moving up and off the mat. Getting above that high from 2 days ago, I would look at it. I would look at it again. Okay. Let's go to the next one. This is Comfort Systems, one of my favorites again. You guys are good, man. These guys got you trained good in this room. Did they? Let's see. Where's earnings? They have not reported yet and have a little ways to go. Okay. Let me look at a year. No, they're coming. They're coming soon. They are reporting really soon, 25th. They might report Monday. Maybe even tomorrow. I'm not sure. But I don't like taking trades heading into earnings reports. No matter how good stocks are, you can always have that, that one-off event that you can't see coming. It's hard to see a one-off event coming here, but they call them surprises for a reason. You know it? Prices have really flattened out here. I think you buy it above the current high. When it's going up again, that's when you buy it. This one. It hasn't had a big enough drop to warrant trying to pick anything up at a discount here. You're just buying right into the face of resistance if you do that. So it's got to break through the high. Okay? Remember, I can't give financial advice. I'm just telling you what the charts look like. And what a guy who looks at hundreds of charts every single day, how that person might look at these charts and these numbers that we're looking at here, okay? This is Serve. Serve has a one white soldier. That is a 2-bar reversal pattern. So that sticks off the page at me right away. The one thing we don't have is a lot of interest. So this did this on pretty light volume. It went back, filled gap. We definitely need the one more day here. But if you get the volume, it's a lot like all the other ones we're saying that have pulled back. What you need is, you need the volume and you need price to respond here. So that's the way I would look at all these. Did I get them all? I think I did, Joe, didn't I? I just want to make sure I didn't shortchange anyone. I'll look at the chat here a little bit. Ethereum has significantly outperformed Bitcoin since April. Okay, good to know. Wow, that is significant. 142 to 25. Hood and NEM get the same. Yes, very similar. Hey, what's up, Stefan? That's one of my Jockey Club. I have a bunch of Jockey Club people in here, actually. Robert, fix earnings after the close today. Yeah. So let me give you a couple of examples of things that I've seen recently that I think are tradable. I don't generally like trading earnings because what ordinarily happens is you have sort of this exuberant day and then things settle down for a few days before they get going again, and I don't like sitting through that. But having said that, GM and Carpenter Tech both had earnings announcements here this week, and both would have been tradable in my view because I like this. Pulled back, announced. Okay? And if the business has improved, hear me out here on the logic, and then we got to get rolling. I know, Joe, I'm over. Pulled back, gapped up. This is called a breakaway gap. Look that up on Google. It's very bullish, okay? But what I like is if the model has improved this significantly as a result of their report, and I got a fair price here. Prices hit roughly the same price that this thing opened at recently before that was even announced. If I can catch an earnings announcement like that, I'll trade it. Okay? Carpenter Tech, same thing. Okay? You got a fair price right out of the gate. Prices had already been there before those earnings were announced. What I don't like is chasing things like this. Prices gap up 36% on news or on some kind of earnings report. That often leads to this. And where do you go? You go back to where you were getting a fair price before. So what we want to try to do on earnings reports, they should not all be treated equally. You want to try to catch a fair price. Oftentimes, if you can't get it that first day, you will still be able to get it, more often than not. And that's the end of Trending Thursday today. Joey, we got to go. Thanks, y'all, for being here. Sorry I was long-winded. Hopefully we got to everyone. Hopefully you learned a little something. And we'll see you right back here on the YouTube channel with our next presentation. We'll see you soon. See you soon, guys. Okay? Great to see you.